Let's check out the energy markets this morning. Natural gas futures falling to near 3.5-year lows. They're down 50% just in the space of a month. There continues to be a surplus of storage as production is near record levels, while the price of crude remains below $80 a barrel. The Energy Information Administration says that crude inventories jumped by 12 million barrels to 439.5 million. Analysts were only expecting a rise of 2.6 million, so that is a much bigger move there. Joining us right now is Amrita Sen, who is Energy Aspects founder and director of research. And we know the supply has gotten to be a much bigger deal, a lot more of it there. But I think it's still kind of startling to watch what's happened with natural gas, Amrita. What would you say? How would you describe this?
I think the natural gas phenomena is far more to do with winter weather, really. I mean, it's been super warm, continues to be warm. I mean, we lowered our Henry Hub price forecasts down to $1.75, and that we think we should cut about 1.5 BCF a day of Q2 production in order to balance the market. I think Haynesville is going to be the first to respond, then Appalachia as well. But yeah, it's just there is just no winter weather right now to support the kind of production that we are seeing.
And normally, you would think seasonally, we'd be getting into a much tougher time of the year as winter is furthest away that it's going to be this entire time. But there are some people who think that the bloodletting is going to stop at this point because prices are at such low levels, it's going to put some of the producers out of business.
Well, whether they put producers out of business or just they voluntarily cut production. I mean, we have seen in the past, EQT and Antero, they have kind of come in the past to cut production because at the end of the day, nobody wants to be producing at losses. So I think that is roughly why we are talking about prices needing to go to levels, which then incentivizes producers to curb production.
Amrita, I don't know if you saw the Shell forecast, but increasing demand from China and Southeast Asia as over the next 15, 20 years, they switch from coal to natural gas. I mean, these are rapidly growing economies that need energy. 50% increase in global demand for natural gas between now and LNG, too. What about that move by the Biden administration to throw a bone to the hardcore climate lobby before an election? Does it really, some people said it doesn't really do that much. It's only new ventures. So the other ones continue so they can do it without actually hurting things. Or is it as stupid a move or as political a move as it seems?
I mean, look, if this move were to be permanent, remember right now it's just a pause, then of course it is going to have a massive impact on our long-term balances. Right now, it has minimal impact on our short-term balances because most of the FIDs projects are still going to go ahead. It does imperil some of the projects that had hoped to reach FID this year and enter service by the end of the decade. But ultimately, we absolutely believe that the decision is political. We are very optimistic and we are very bullish on the demand for natural gas in the long term, precisely for the reasons you highlighted. I mean, Asia, Latin America, even Africa, there's a huge need for natural gas there. But yeah, I think we're not expecting it to be set in stone. It's a few months impact, we believe. And yeah, I think it comes at the outset of the presidential election, of course. And I think that's why it is a political decision.
Such a gift at $1, at where it is, the price where it is, and the emissions that we're talking about versus other things, and the price versus renewables. It's like it's staring you right in the face. Is the great other than nuclear, is the greatest answer to the world's energy needs.
I think the argument that if U.S. industry is actually lost out because of exports, it just doesn't hold. I mean, look at where prices are. And the one very quick thing I want to add is, I just got back from India Energy Week in India and meeting with the minister there. He was very open in saying to me, look, the EVs we are doing, it's going to be fired by coal, which we've known about. But the reason for that is because coal is right here. It's secure, it's reliable, and it's cheap. And this is the thing Western politicians don't understand, that decisions like this actually make natural gas a less reliable source in Asia, and they will absolutely continue to burn coal, which arguably actually is easier to decarbonize in the longer run. But the point is that if you make energy in the West more political, then you're not going to be able to get Asia away from coal anyways.
Is the damage already done in that sense, Amrita? Not just for countries like India looking at this and saying, hey, we're not going to put ourselves in a position of being vulnerable, but even companies that have to make investments for billions and billions and billions of dollars for decisions that are going to play out over the course of the next decade. Are they willing to step back in, even if the decision goes their way, because they have to worry about the back and forth, the political winds?
I think the point you make is excellent, and I think this is exactly what industry will not want, right? I mean, this is disruptive, and it makes it very, very difficult for companies to make investments. And then the same companies are then, penalized if prices go up in the medium term because they haven't invested. So it's no win for them. I still do believe that there is a huge interest in natural gas. I think India's move was much more because of what happened after Russia's invasion of Ukraine and the price increases we saw in LNG on the back of that. I mean, ultimately, they do want to move away from city pollution and away from coal, but yes, in a much more sustainable manner and in a more cost-effective manner. And I think that's where, the Western governments do need to realize that.